Hello traders, Gary Wagner here just after 10:30 in Honolulu, 4:30 in New York on Wednesday, the second day of July 2014, and this is the daily report for gold and silver. Although we have quiet trading today as we get closer to a 3-day weekend, tomorrow we will actually record our weekend report. We do have the precious metals higher, with silver leading the way in terms of percentage gain. First to gold, current print on the screen 13.26 and change, puts it up roughly $1 on the day. The low 13.20.50, the high 13.33.40. Silver actually having a very nice performance, up almost 1%, up 0.81% on the day, or 17 cents. Current print on the screen 21.15. It has had a high of 21.39, a low of 20.80. More on silver towards the end of the show. So traders, here's the thing. We do have silver up actually quite nicely. We've got gold trading anywhere between unchanged, up and down $1. You can see that by this doji. Last couple of days have been these opens and closes that have been relatively close in terms of the price range. That's the definition of a doji in Japanese candlesticks. And I can honestly tell you, I thought that we would probably see lower volume, thin trading market, and we are actually getting that. Although we're getting that, in my opinion, as we build a base, and we've talked about this, we have these spikes in price followed by market really resting, building a base, consolidating, then you'll get another price spike, another consolidation, spike, consolidation, so forth. We had the longest one yet, in which we had 1, 2, 3, 4, 5, 6 trading days. There's 5 trading days in a week, 6 trading days in between. This was Thursday's dramatic rise, and this would obviously then be Monday's. Let's make sure our chart is updated eloquently, which it is. Just want to make sure I don't miss any kind of days. And so we're looking at then this being today's Wednesday, Tuesday, and then of course Monday's $10 higher price. So we are really seeing the market genuinely trade with these periods of base building, followed of course by nice spikes in the market. And that to me bodes well, because what tends to happen when you have a marketplace like this that has such an orderly progression, that what tends to happen is we're not seeing the kind of corrective action that we'll typically see as a market runs up very quickly, it heats up, and then it corrects, anywhere between 20-30% of the correction. So I am liking what I'm seeing here. When we look at it, let's convert it into our Japanese average. And when we do that, what we're seeing is as follows. Is the trend strength as strong as it has been? The answer is absolutely not. We've got smaller body candles. We have wicks in some of them. We look at the lower wicks on the way up, upper wicks on the way down. Just like here, you have the absence of all the upper wicks. Here, you have the absence of all the lower wicks. Lower wicks right in here. So, is it weakening? Yes. But here's what we're noticing when we look at the bigger picture in terms of where our current price point is. And to do that, I've actually created 2 different fib retracements, one for the rally and one for the correction. And what we're looking at is as follows. We have our first fib retracement, which covers the entire big rally that we had starting last year, culminating, call it mid-March. Then we have a second fib retracement. Now, I've moved this line over so we can have our grid panel on the left and be able to read the numbers, but in essence, that's starting from this top at 1391, moving to the bottom. And of course, what do we look for? We look for different levels of harmonics and also look at the individual numbers themselves. Now, we've identified support at 1311, and you can see 1314, 1311.86. There's a band across there. We can see that it lines up as a 50% retracement of the correction and a 38% retracement of the rally right in here. So we've got good support down in this area. We know that. In terms of our numbers on the top, we have this one top here that we've talked about, 1331, but that also corresponds to a 61% retracement. So we have some support coming in here. You can see that the last couple of tops have absolutely run into that wall. Once it makes it past that, the next real minor level has got to be 1342. And then 1355. These are minor levels because I think the major top to take out, if we're able to take out this next point, our next brass ring, so to speak, has got to be 1391. So traders, first of all, I want to thank all of our loyal subscribers out there. They are the ones that give me the inspiration and also the momentum to really work and do the best job I can. I got an email letter a couple of days ago from one of our subscribers and said, what's happened to the Andrews Pitchfork? You don't really take it out that much anymore, and I've got a feeling there might be something going on. There absolutely is, traders. One of my reasons for being shy with this particular chart is I believe it kind of faked us out last time. At least me, not you guys, but it did me because it actually broke above this line, but that was it. That was absolute resistance because the market came back down. And then look how clearly it follows support right around this 23% channel. Lo and behold, look at what we're at now. We've actually got the market breaking through, trending higher, and now moving sideways. And as you know, for us to actually, on a technical basis, for us to actually say, you know what, we are experiencing a basic key reversal from a bear market to a bull market, how do you know that's happening? And we have certain benchmarks that we need to see happen. Up till now, these benchmarks have been going to but not through the areas. But we can say when we look at this particular Andrews Pitchfork that we're absolutely at this point broken above this upper level channel, and this channel of course is really our downward resistance line. That's what it is, and it cascades down, so I call it cascading channel lines. But there's no doubt we are in fact moving above that, and that bodes well for the gold bulls out there. I am one of those, of course. Silver's an interesting animal. It's very, I believe, one of the more difficult ones to predict, but we've got a good trade on. We've got good trades in both gold and silver. But here's what I'm really finding interesting today. If you recall back from our rally, which began at the end of 2013, beginning of 14, we had gold really moving nicely to the upside, and we had silver really caught in this just tremendously narrow band, trading about $1.50 range right in here. From there comes the end of January, February, and we get this tremendous spike, just a dramatic spike within the marketplace itself. We had gold continuing to trend higher, but it certainly didn't spike like this in terms of percentage gain. From there, we got really almost a parabolic rise, and we got our slow demise in which we came and tested even a lower bottom. At this point, 1860, 1880, this was a point I was saying that if we broke above a certain area, a certain level, at that point we would have to say we're back into a bullish market. The absolute truth of the matter was around 1958, that was one of our numbers in 48, because it broke above these tops right in here that we weren't really able to get out of the way of. Now, what we have seen, we are definitely above 21. I'm looking for $21 to become support. And as I said, I believe starting about a month and a half or 2 months ago with silver, as it started to move, my belief was that if it took off on a technical basis, that there was really no real resistance up till $22, and we could see that kind of a dramatic run. Now, that sounded odd when silver was still in the teens, high teens, 19, but in the teens nonetheless. Now that we're at $21, it's not such a far stretch of the imagination to believe we'll see 22. But you know that you and I, we looked at it, we predicted it long before many of the other pundits out there were. My recommendation, obviously, we want to maintain our long positions. We do have some economic data coming out tomorrow early rather than because of the markets being closed on the 4th of July. We'll have to see how that pans out. But I think personally that we've got a pretty good trade here. Maintain long positions in gold, maintain long positions in silver. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up. Bye-bye.